Hello folks, this is Brandon from Rampage Trades and today is March 9th, 2024. My gosh, we're in the month of March, folks. 2020 analog playing itself out. Title of my stock presentation is Stock Market Warning. Nvidia marks the top. I've been warning you that Nvidia has been making a climax top, and I want to bring you the presentation that this market is about to rip lower. And if you're complacent, you need to listen. At the very least, consider the fact that many of the indicators that we look for have been flashing warning signs for well into a month. And I know I sound like a broken record. However, that is true. It's about 4:58 p.m. on this Saturday, March the 9th. Again, all right, here's my disclaimer. Please read it, pause it. If you, agree, move forward. All right, so it's simple. Nvidia is marking the top. And in fact, Nvidia is the Tesla of 2020. If you want to look at those charts, heading from November of 2019, just right before the market crash into February, I believe about 15th to 17th on Tesla. Tesla went parabolic, going up 150 points and dropping famously multiple hundreds of points within days. Okay, that is about to hit Nvidia, and I'll tell you why. And if you missed it on Friday, that is just a warning signal. Any type of bounce attempts intraday should be utilized to build your positions on Nvidia puts. Now, I'm going to say it again. And I don't care if I sound repetitive, I keep putting this in all my videos. Stock market closely resembling 2020 presidential cycle analog. Guys, you gotta listen to this, okay? And the thing is that I don't have to do this, but I'm gonna do it because I don't want you to, you're about to get caught in this right here. All of this, okay? We are just about right here, okay? And that should scare the bejesus out of everybody if you're listening. And for those of you, I'm not advocating anything, but you have to consider that this is where we are right now in this bullish engulfing type of candle. I mean, not bullish. Oh my gosh. How dare I say bullish? It's bearish engulfing candle. This is what's about to come in the next few weeks within the March period, folks. All right. And if you don't believe me, all right, and this is from my February 1st top, and we've gone much higher, and they have done so too, right? As it started February, it went higher. Okay. We are about to stall out right here, and let me show you why that is the case. And if you want to pause this video and really see what is about to hit us, this is SPY, folks. This is SPX moving on some days from 32.50 all the way down to 31.25. That is a 125 handle move that is about to come. And for those of you with futures options, or you gotta start buying some protection now, okay? Not financial advice, but you have to start considering that being a perma bull at this point and going to infinity and beyond is not going to be the case. All right. Now, I do believe that we're going to have a rip your face off rally heading into the presidential election cycle later on in the year. But right now, we are going to get a very similar type of a sell-off as we did in end of February to March of 2020. So where are we in terms of market sentiment? We are so early in this stage. This was back in March 1st. Everybody went to extreme greed. We're still greedy. Went from 77 to 71. Guys, the retail crowd is being used as exit liquidity. I've been saying this time and time again, and I'm going to say it again, okay? I don't want you to become exit liquidity for these big giant Wall Street banks who are dumping on you. Jeff Bezos is dumping on you. Diamond is dumping on you. Elon Musk is dumping on you. All right? We are not going to infinity and beyond. Well, not before a massive, scary, big-ass crash. That's what's coming. And our directional indicators are directional to the upside, but I have something to tell you. It's not commensurate with the market rally, and I have something to share. This is my famous McClellan Summation Index. When a 50-day moving average starts to curl and starts to meet a rising price chart, that is indicative of a parabolic run and a parabolic sell-off. okay? And that is coming right now as we speak, and these are very rare formations. So any rips intraday, and there's going to be plenty of them next week. We're not going to crash down in a straight line, but every time there's a rip, I get these commentaries or people saying, well, yeah, but you said it was going to happen. I said short the rips, and that's what needs to be happening right now, okay? MSI, which is McClellan Summation Index, is sending a warning signal. We're about to cross that 50-day moving average. It's very bearish. Now, the put to call ratio is at 0.56, even lower than last week's video. This is complacency, folks. It's music to my ears. It means there's going to be a lot of fried bulls, man. All right? I don't know if you've had some fried bulls, but it's not going to taste good when they're charred. All right, so now here is kind of our market sector analysis. Do you see anything ominous? Last week I said they're breaking out. Now we got these bearish engulfing candles all over the damn place, especially the technology, which has been leading the way up. Industrials have a bearish engulfing. We have the materials bearish engulfing. Now energy is, it's just kind of stalling out. Doesn't have a bearish engulfing, but I don't really trade energy stocks anyways. All right, here's consumer staples. I said, look at this. This is an island reversal, even worse, right? Healthcare has been strong. But it's putting in now not only a doji type of candle, but it is a bearish sort of engulfing. Not yet, but it is a doji. Utilities, who cares, right? Financials, forming a doji candle, right? After forming a bearish candle. Guys, financials have been strong because the Fed has been propping up banks while, New York community banks are failing, and they tell you to your face that everything is fine. It's not fine. Just go look at the credit default swaps on all these major banks, especially JP Morgan Chase, Goldman Sachs, Deutsche Bank. Okay? Now, gold has been on a rampage, right? I love that word, rampage. But it's signaling ominous events are about to unfold. I have not seen a gold move this parabolic fashion in a long time, since 2020 and financial crisis. All right, this is a major breakout for the gold. Okay, well, you're going to say, well, but gold did that down here. Yeah, but look at where the price was. Okay, oops, this is, hold on. Well, it's a damn good thing I caught that. That was the SPY one, and I apologize for that. But gold, let's go back again. Gold has been parabolic. The last time we saw these type of moves was back in October, right? Down in the 1840s, but it really didn't get much higher than this 2006 and before pulling back. But it's been building steam. It's been making these higher lows, okay, higher lows before breaking out. Gold going parabolic is a sign of systemic problems within the banking system, inflationary problem, or shit, maybe they are anticipating a global contagion of some sort heading our way. Okay, could it be a war? Could it be another pandemic? Or, I'm not supposed to say that word, the virus stuff, right? So that's what's happening on gold. So let's go to the SPY daily. Okay, SPY has now been, I know what you're going to say. Well, it'll pop right back up. It's been pulling back 2 days and it's going to do that. It very well may, but we're still going to maintain the posture of shorting the rips. But this is a bearish engulfing. We have the RSI negative divergence. Look at all of these sell volumes, which are predominant volumes. These are the clues that you want to see. Of course, you could do more in-depth analysis, but I am telling you, with the Nvda signaling the top, we're coming down, folks. All right, look at the CCI, look at all these divergences. All right, now speaking of Nvidia, all right, Nvidia has been going parabolic. This is from March 1st, and I said Nvidia is making a climax run. There's continued divergences. I said pay attention to this. Okay, should have been building your positions, and I said we're gonna pop and we're gonna make that parabolic run, and then we're gonna be selling off. Well, March 8th was the day, okay? And we are right in that time zone. This is a big fat bearish engulfing candle, and basically look at the size of this volume, all right? MACD hasn't crossed over yet. That means there's a lot more meat on the bone. Are you listening that Nvidia is not going to go to infinity and beyond? In fact, it's going to fall to these levels, and these levels when the sell-off gets going, all right? Do it, and I'm going to do it, and we're going to be selling this now that we have this confirmation, okay? Now, Apple has been warning us for some time that all is not well in the market. I said it is a market barometer. It is a sector leader, and it is sick, sick, sick. And everyone's saying, well, but it's kind of bullish on Friday when everything kind of sold off. Well, it may pop up to here. It's coming right back down, okay? Apple has not only some internal issues, but it is the barometer for the market, okay? Rest of the market is going to now start following Apple. Okay, remember I posed that question. Meta is being stubborn. Meta is probably one of the strongest stocks out there, but I believe that we are beginning to put in that top. Okay, it's stalling out. There's lots of meat on this bone. Once it falls, it's going to be a cascade sell-off event, and we have this nice big gap that needs to be filled at the very least. And for those of you that just want to play gaps, what a beautiful gap that is, folks. Okay, Bitcoin. I said Bitcoin climbing is a negatively impact for the markets, and that is showing market instability and flight to safety. And guess what? We're hitting all-time highs at this point. Bitcoin has gone parabolic. There's some divergences forming on RSI. I don't believe pullbacks are going to be that big. Okay, and the market and the Bitcoin are not correlated. It is a flight to safety, just like gold is. Cheaper way to play Nvidia is basically semiconductor index SMH, or SMH. And basically what you want to do is continue to follow that Nvidia. It's following that. Okay, it's a cheaper way to play. And look at all these room to run down here. Price moves from supply to supply and demand to demand. And this is a classic example of how you should be looking at the stocks. Now, Tesla, I've been saying that we're going to bounce a little bit, and we did. And now we've sold off. There's a gap down. There's more meat on this bone. We're targeting about 153.57 in the short term. Of course, it's going to go lower. I know I made that comment a few messages ago. At the end of this sell-off, I believe it's going to be in the 110 to 120 range, possibly hitting 90, 99, 98, potentially. All right. We'll see where it goes. All right. Now, Deutsche Bank. This Deutsche Bank is in trouble, and yet it's being propped up and held up. But XLF is now beginning to form that bearish engulfing candle formation. CCI is stalling. MACD is basically flat on the histogram, but still divergent from the last highs right here. Okay, and RSI is divergent. So financials have been propped up. Fed has been propping up banks, guys. They're buying. Whoever is propping these banks up does not want the banks to fail. Yet we had New York Community Bank fail. It's going to have a contagion effect going forward, and that's when all hell's going to break loose. Okay, now ULTA. ULTA reports earnings, and I've been eyeing this for a while. Okay, ULTA has broken down. It's given us the signal. It's breaking down from that bearish aspect. It's now below this red line, which is 20 SMA. I believe that these fringe retail boutique stores are at risk for consumers that are tapped out on credit card debt. Okay, earnings are on March 13, 2024. Just pay attention to this. There's a lot of room for this to fall again. A big gap play. Okay, this is going to be our play of the week, folks. Now, markets are euphoric, and they're still euphoric. I believe the bell has been rung, however, by Nvda. 2020 historical analog play is playing out and alive and well. It's not dead, guys. So, in summary, market complacency and euphoria remains, but things are about to change really, really fast. But there's going to be enough room. There's enough meat on this bone. It's not going to go down in a straight line. We're going to get these bullish rips that everyone's going to say, oh, you're wrong again, Brandon. I'm not going to be wrong. I'm telling you, we are in the meat of the 2020 historical analog. I've warned and warned, and these rips are to be used to short or get into cash and build positions. Apple has been warning you. It's telling you something, and if you can't hear it, then you're deaf. Nvidia top, Meta top, Tesla following Apple. Okay, these are the big kahunas, and they're telling you. So don't be complacent. Here's my watch list. Hasn't changed much from last time, except that I've added ULTA. Okay, these are the ones that you want to short. That's what we're going to be looking to short on bounces. Beware of the 2020 analog, I've been warning, and there is that 1999 to 2000 .com market similarities in the structure and the way things are setting up, folks. All right, wait is over. All right. I think the top is in. We could chop around here. Can we go a little higher? Sure. I'm not really worried. Okay. The main thing is that if you are a serious trader, you want to be building some short positions right now. Okay. We are about to be paid for nibbling on these bounces. The climax top is in, and 2020 analog is about to start, and gold has gone parabolic. Enough said, right? So, thank you for listening. Click the link below, schedule a complimentary 30-minute coaching session with our senior coaches, and subscribe, like us, comment, good and negative. Okay, I appreciate you for watching my video. Thank you so much. Let's rampage.